Hello to all traders and welcome to another Markets and Waves. We are in August, finally, the most quiet month supposedly due to the summer vacations, of course, and traders being away from desks, but volatility remains high. As you well know, we are during an economic situation that we haven't seen before, and for that reason, I don't think that August is going to be as quiet as it has been usually, especially following the FOMC. Now, with the macros on the side, let's return back to our Markets in Waves daily video, the daily update using Elliott Waves. And today we're going to have a quick look at the US index, the euro dollar, pound dollar, oil, as well as gold. Most have moved exactly as expected, apart from oil that we're going to see what really happened. I mean, using moves as expected, but not exactly, okay? And that's a similar case for gold. So starting with the US index, guys. Actually, why do I have gold here? Anyway, it doesn't matter. Starting with the US index, we talked last time about the potential move to the downside. You see, we didn't reach the 1618 extension, but because we have a 5-wave move down here, well, we ought to label this as the end of wave 3, which is around the 150 Fibonacci extension. And it looks like to me an ABC is building, okay? And over here you can see that we're moving sideways, so we might get some sort of X, like it could be a flat, it could be like a triangle or anything else, and most likely then we're going to get a Y, and from there start moving lower down. Now, what we want to see, of course, we want to see prices remain below wave 1, and that is not impossible. Now, it could be also a case that this is the first wave of the triangle. It's going to be second, third, fourth, fifth. Then we're going to get something like that. Actually, it would be something like that, yes. But if we pay attention to the correction in wave 2, I think, and the correction in wave 4, I think we might actually, apologies for this, we need to look at the correction in wave 2, guys, right? So this lasted, the date from 1 to 2, it lasted 6 days. So if something similar happened to here in corrective wave 4, then we're probably looking at ranging until the 5th of August or so, okay? So I already, expect to see that correction ending one of the following days and then continue lower down with, of course, the 9164 being the first level to be reached anyway, because it still makes a good level. And then we're looking at 9138. So it might be a case also that this median trend line is going to hold well, which usually is the case, should, of course, there is a trend that needs to be intact. Euro, guys. Euro did a much better move to the upside, okay, compared to the index downside, which means something else is weaker from, euro and pound is not, but probably we're looking at the Aussie, perhaps even dollar cut, who knows, because these currencies carry, sort of used for carry trades, are not as strong as, what is considered to be safe haven now, euro dollar. Anyway, we did the 1618, and that is my wave 3 done, okay, for sure. I see again another ABC. So you see, I called both WX and Ys. We're going to see how this develops. Now, the difference here is that, guys, we've got, it can be considered as 1, 2, 3, and 4, which means, it could still be in wave A, okay, because we haven't really interacted with wave 4 didn't penetrate wave 1, but I think most likely going to follow the same route as the index. If this is X, because W is done, X usually retraces 78.6 or so, okay? But we're not going to see the wave X doing lower than 61.8 in most cases, in most scenarios, okay? So with that said, guys, I'm expecting some sort of correction here as well, and then the continuation of the bigger degree correction. And once 4 is in, then I'm expecting prices to continue moving higher. Now look at this. The base channel has really created very good level over here. So it might be a case where we might see another attempt, just a fresh low below 180.50, and from there shoot higher, because don't forget, we don't want prices to go below 118.30 for this trend to remain intact. Okay. Now GBPUSD, multi-structure move to the upside, looks like to me. At least if we look at the structure, that's the only one that makes sense so far to me, again. So you've got 1, 2, 3, 4, and 5 for wave 1. The 2 is in, 1, 2, 3, 4, 5. I don't want to call this 3 because it's less than 100%. So if we want to see a good structure and good markets, especially like for pound, it's okay. We can expect at least 100 Fibo, guys. Otherwise, most likely, and that's the case seen in diagonals, diagonals do less than 1. Yeah, then you get a deep correction, and then you get a fifth wave that is, of course, smaller than wave 3. Yeah, usually this is what happens, but we're not expecting diagonal here. Yeah, we're expecting a move to the upside after finishing a flat pattern. And I see this as multi-structural move. With RSI MACD confirming the divergence, I do expect another leg down. Here it looks like we've done A already, okay? So we're gonna get B and most likely then C. We could go down to 61.8 because this is a wave 2. Usually wave 2 does retrace 61.8, okay? So pay attention to this, guys. Is either case where this is ABC or, as I said before, the main scenario that this is A, we're gonna get B and C. But if the alternative is in play, then it means that we're going to break above 139.80, hit for 130. Probably we're going to get some sort of multi-structural mover here as well, because with 140 ahead of us, you know, we cannot get wave 3 over here, obviously. So I'll be looking at those signs, guys. Okay. Now for the US oil, as I said, things look a bit different to what we expected, because I was looking at 1, 2, 3, 4, and 5 to end over here. Yeah, thing is this, obviously that could be a diagonal, but now because it continued high in a way that the structure does not make sense to be an ending diagonal over here, then we've got to respect the length and duration of wave 2, do a similar wave 4 to respect the fractals, and from there we've got, you know, this is like a leading diagonal over here, and this is my 2, my 3, my 4, and my 5. This is where it looks to me, at least, guys. And with this big signal on the RSI MACD coming up, I think now we're going to get 1, 2, 3, 4, and 5. Then ABC, 1, 2, 3, 4, 5. Once we get to the 38.2, perhaps, we're going to start moving higher up. And you might say, why 38.2 now and not at the 61.8? Well, because we are looking at we're looking to break a previous high off a wave 1, right? So we want this move to be bullish. In pound, we're not expecting that to break a previous wave 1, okay? We're expecting to go in wave 5. So that's the difference. In 1, we need more momentum, if that makes sense, because we are just in the beginning of wave 3, which is impulsive. So I want this to retrace as less as possible, if that makes sense. And without that meaning, of course, we cannot go down there, right? I'm just looking at those confluence levels. Fibo from here to here, 23, 38. Look at the 38 and the 50. The 50 is from top to bottom, yeah? So the 71 might do a very nice retrace, okay? B and C. Do note, though, it might be any other type of correction, apart from a triangle, of course. So this is what I'm looking for oil as well, guys. Short-term correction and medium and long-term up. Now, gold, the fractals of gold, they're just amazing sometimes, you know. So we had a WX and Y here the other day. The fact that we went all the way up, yeah, and it could be in a ABC manner, because this is what I'm looking over here. Instead of having a truncated WX and Y, the W looked a bit weird, you know. because a WXY like this, usually it's going to be WX and Y to continue lower. Otherwise, the pattern we had before with a triangle, is usually on a sideways market. So it would be like W would start here, for example, like W, X, and then Y. Anyway, that makes more sense now because of the new sort of data we got, okay? And it looks like to me, this is my wave A, my B, and my C for A. I've got an ABC, which is an expanding flat, guys, in wave B, yeah? And that wave B of the expanded flat in wave B is a triangle, yeah? How amazing. And then we've got 1, 2, 3, 4, very obvious, and I'm expecting a fifth wave. Either it happened or we might get 1, 2, 3, 4, and 5, which is most likely to the base. So I'm expecting the 1800s, guys, the 1800s to be a very good level to start moving lower down, to start bouncing up, sorry. It might also be making a confluence level, a cluster here with the descending channel, the ascending channel. But we're also looking here, because we're on wave 1, okay, we're looking at the running flat to take us to around the 23.6. And why are we talking about running flat and non expanding flat? Is obviously the fact that if we get an expanding flat there, most likely we're going to invalidate the upside move at 1783. Now, we might get the expanding flat. It means we're going to have an extended wave 5, most likely, right? And we are going to break the 1800s and head for lower prices below the 1789, but above 1782, guys, okay? Now, the other scenario, of course, do not forget, because as we did last time, that might be W, still X and Y. And this is wave 1 and this is wave 2, yeah? Actually, that's going to be wave 2. And then we're going to continue up in wave 3. So it's one or the other. We need to see how this develops. But for now, either a 5 or an A, they're both in place. So the game is going to be understood much better over here. If we get a 3-way move and we start moving lower down, that's 1 and 2, because that's going to be an ABC. But if we get a 5-wave move from here, then that this is my running flat and we're going to continue higher up. So this is going to be all for the day, guys. I hope you enjoy the beginning of the trading week and the trading month as well. And we'll be here again tomorrow with another Markets in Waves. Thanks for watching and see you soon.